Unstoppable. Relentless. It's the ironclad investment discipline. Are you having concerns about your investments? This short video, I'm going to do a State of the Union, for lack of a better word. Really, I'm going to give you what I'm hearing as what people's concerns are. I'm going to share those concerns, and then I'm going to address those concerns, hopefully provide you some perspective so that they become less worrisome to you. Let me start by sharing the last video I did was back in October. We were just come off a horrible year in 2022. Stock market, bond market was awful, returns were awful. And then we started the first chunk of 2023 and the markets went even lower. So when I did the video in October, things weren't looking good. And at that time, short-term bonds had spiked up and people were getting over 5.5%. And I shared in a couple of videos that I thought it would be a mistake to take your long-term money and put it in short-term bonds. Without sounding like an I told you so, really I'm coming at this from a lesson perspective. Well, things turned out the way that I thought they might. Stock market went up much higher. It's ripped considerably higher than where it was back in October, September. Bond markets have gone significantly higher and interest rates have gone down. So where you used to be able to get 5.5 on a short-term bond, I think right now you're looking at 4.60, 4.5%, somewhere in that range. So I tend to do more of these videos when the market's not behaving well, because people genuinely need more reassurance during those periods of time. But here we are, markets are setting new highs, most markets, and people still have concerns. So let's talk about what some of those concerns are, and then as I said, I'm going to address them. So, I mean, the list is probably a lot longer than what I'm going to share, but some of the big ones are people are still very worried that as a result of the much higher interest rates that we have today, that we're heading to an economic slowdown. Housing problem here in Canada, I think, could pose some challenges as people's mortgages come up for renewal over the next couple of years, which is a very different setup than it is for my American clients, where they lock in for 30 years on their mortgage. That's not how it is in Canada. So that's still a wild card. We're gonna have to see how that unfolds, and I don't think a lot of people are ready to have their mortgage go from 1 or 2%, where they locked in a few years ago, to 5%. That's or 6%, 7%. So that's going to pose a challenge. Deficits are high in the U.S. and in Canada. That's been going on for a while. Continues to get worse. We have political situation in the U.S., which is shaping up to be a real gong show in terms of the U.S. political election, no matter what side of the fence you sit there. You've also got the situation in Ukraine still going on. We had the situation on October 7th with the horrible atrocities that we saw, and the resulting situation that we see in the Middle East now. China, there's talks that they may invade Taiwan. I mean, these are just to name a few, some of the concerns that people have. And as I've shared many times in these videos, when people get these types of concerns, it shapes their investment decisions, which in turn hurts them. So let's talk a little bit about how I would address those concerns. First, let me say that I don't know how any of these things obviously are going to unfold, nor do I think it matters. I mean, it matters in the short term. I don't think it matters long term. At least historically, that's been the case. So if you are having that concern, here's what I would say. Number one, and by the way, everything I'm about to share here, I've probably said in some form or another in one of my newsletters or my videos that you may have seen. It's not new, but there's method to my madness. The reason I'm repeating these is because I know that most media around the stock market, the economy, is negative, because negative news sells. And that chips away at people's confidence, and then they do something foolish, like putting all of their long-term investment money in GICs. And those of you watching the video, I'm hoping you know who I'm talking to, because I've got many of them that are out there that have made that mistake. And I say that compassionately and empathetically, but it's hurting you. And so if you're having that thought or concern, the things I'm about to say, even though they might be repetitive, the method behind my madness is to arm you with things that are going to help you feel better about things, to keep you invested, which in turn is going to give you the best chances possible of meeting your objective of growing your wealth over time. So first thing I'd say is, pessimists sound smart. Someone at a cocktail party is giving all the reasons why the end of the world's coming. They sound smart. People that make money long term are optimists. It's just always been that way. And to be clear, the pessimist that's calling for the end of the world, they're eventually going to get their call right. But the problem is that even when they get it right, they're going to still think the end of the world's coming and that we're just waiting for the second shoe to drop. And meanwhile, the markets then go on and recover, and the pessimist is still calling for doom and gloom. So pessimists sound smart, optimists make money long term. Always been that way. I suspect it always will be. Second thing I'd say is the value of a stock price, the value of a business is a function of that company's earnings way into the future. And if you blow up a company's earnings in the short term because of some microeconomic event like a political election or a country invading another country or a pandemic, that does not historically have a material impact on the value of those businesses because you're valuing the earnings of those businesses decades into the future. Now, go to COVID when we had lockdown. Companies couldn't sell their products and widgets because of lockdowns. The price of the stock went down in the short term, but it didn't kill the price of the stock long term. The stock market, benchmarks around the world, are higher today, significantly higher than where they were before the pandemic. So I would argue if COVID can't kill the stock market, what can? Historically, these events come and go, these negative events that these pessimists call for, and then the market goes on to recover. So that's an important piece to understand. Next piece, I've said it many times, I'll say it again, market timing doesn't work. We know empirically stock markets are going to go down significantly and they're going to go up significantly. And over time, historically, they've gone on to set new highs. And you don't know when it's going to go up or when it's going to go down. Jason Greenlee certainly doesn't know. Warren Buffett doesn't know, or any other pundit that you might be following, they don't know. Staying invested through all parts of the market cycle has always been the best strategy. Another thing I would say is, I've talked a lot about it, it's worth repeating, short-term bonds for the first time in decades, paying 4.5%, maybe 5%, depending on when you bought them. That is alluring to people. I can avoid the pain of the ups and downs of the stock market and get paid 5% where I used to get paid 1%. I get it, makes total sense, but here's where it hurts you. 5%, let's say that's what you're getting. If you're in a taxable account, which most of our clients have taxable accounts, and you're buying those bonds in that taxable account, it's not uncommon for clients to be here in Ontario to be in a 53.5% marginal tax rate. Let's just use 50% for easy math. You're earning 5% in your GIC, you're paying tax at 50%, now you're earning 2.5%, inflation's running at 3%. Your purchasing power is going down. You are losing purchasing power. So buying bonds on an after-tax basis historically doesn't keep up with inflation, which then takes me to stocks. There's been no better hedge to inflation, and let's face it, we've had high inflation recently, than owning good quality businesses. Good quality businesses will take their products and widgets when inflation comes and sell it at a higher price, pass that on to the consumer. In other words, they have a mechanism in place to capture inflation. So if you want to grow the value of your investments, net of inflation over time, there's been no better place than owning good quality businesses in a diversified portfolio of stocks. So those are a couple of reasons of things that I would say to address your concern. But let me share a story with you that I think, hopefully, I'm able to demonstrate a lesson out of this story. I was doing a seminar recently, which I do regularly, talking about the 6 mistakes that people make with their money. And I spent a lot of time on the stock market and just, the whole thing around people's behavior and them getting worried. That's what's going to shape their returns as opposed to what investments they're buying and selling. Some gentleman came up to me at the end of the seminar and said, "Hey, I really liked your talk today." I said, "Great. Did you want to meet with me to talk about, how maybe you're making some of these mistakes and I can help you to address those mistakes?" And he said, "No, I manage my money on my own and I'm doing a good job. I don't need your help." I thought, okay, not everybody needs my help. But literally, as the conversation went on, within a few sentences, he was telling me that back in 2022, he sold a substantial portion of his investments when the market was down 30% and put money in short-term bonds. And I kind of I had to shake my head. He didn't even get, I just spent a half hour explaining how that's a mistake. It was like he had a cement wall in front of him. He couldn't even see through that. I know there's a lot of people out there watching this video right now. They're not even I'm not even permeating or penetrating this sort of wall that they have. It's like a blind spot. They don't even see it. My hope is that there's someone out there, whether it's a client of mine who's got their long-term money in short-term bonds, and it shouldn't be. I'm hoping that this maybe resonates with them. I'm hoping that if someone does have concerns, even though they might still be fully invested with me, but they're getting worried, I'm hoping that this gives them the confidence of why we're staying invested. And then I want to reach the people that are dealing with it out there that are either doing it on their own and making the mistake that I just mentioned this person did. Look, there's $2 trillion sitting in short-term bonds right now worldwide, which is way higher than it normally is. So people are putting their long-term money in short-term bonds. And to be clear, if you have a need for your money in the next year or two, you should buy short-term bonds with that money. But if it's your long-term money to support you for the rest of your life expectancy, GICs that's not where the bulk of your money should be, but yet that's what people do. So if you're doing it on your own and you're making that mistake and you can see through this brick wall, and I'm starting to permeate through the brick wall, I'd love to help you, give you the confidence to keep you invested through all parts of the market cycle. And then there's those of you that are dealing with advisors, and I hear things like, well, my advisor told me that now's the time to be cautious, so we're putting more money in bonds. And I hear that, and the hair on my arms goes up, because in the back of my neck goes up, because that's the wrong advice coming from a professional advisor. That's saying that advisor knows when the market's going to turn around and go back up. I promise you, he or she does not. So I hear these things, and my great passion is I want to help the people that are watching that, whether you're a client of mine right now or whether you're somebody that's thinking about doing business with us, or maybe you're watching this on my new YouTube channel that I have. However you've come, my hope is that I can help you in some way, shape, or form so that you can feel confident enough to stay invested, which then in turn gives you the best chance possible of meeting your investment objectives. At any rate, I hope this has addressed some of your concerns, and I'm hoping that you're finding the content of these videos useful. I appreciate your viewership. If you are a client of mine, I appreciate the continued trust and confidence that you place in us. Thank you. Be well.